2012 is already shaping up to be a year full of drama and risk-taking as investors look to seize opportunities early on. Joining us in the studio today to discuss these opportunities is Guillaume, a hedge fund manager at Valeco Finance. Guillaume, thank you for coming into the studio today.
Thank you. Good afternoon.
Now, we've heard today in the news that China has pledged to invest in Europe's bailout funds and sustain its holdings of Euro assets. Is this good news for the European markets? What are your anticipations?
Yes, it's very good news, but on the other hand, we have to bear in mind that for China, the future of the Euro and the Eurozone is really important. The Eurozone is by far their first market. And they have to make sure they have to do the maximum they can do in order to sustain Eurozone, to increase their support into Eurozone rescue plans. But China won't make big investments in the Eurozone before the Europeans themselves start to rescue Greece, Portugal with plans that are sustainable and up to the problem we have in Europe.
Can we anticipate investors responding bullishly to this news?
I think it's a good news for Europe, but more on the long-term prospect than short-term prospect. But to see China supportive and willing to make commitments in Europe is a good news for European markets, equities, bonds and sovereign debt.
You mentioned their Chinese commitment, and we have a quote here from the Vice Finance Minister of China saying, "China hopes for more innovation from Europe to provide more lucrative products that are truly appealing to Chinese investors." Now, this doesn't really sound like the words from someone that's looking for a long-term investment. What do you feel?
I think China wants three things from European markets. First, they want to make sure when they invest into European debt, they will see their money back. And that's long-term prospects, 5, 6 or 10 years. Second thing, they want to buy companies with either a presence in European markets, so they can sell their products in Europe, or technological advantages they could use at home in order to enhance their products that they could sell after to the world. And the third thing is they are going to participate to all the program of privatization. We've seen recently China company buying some stake into the Portuguese electricity producer. And so we'll see more and more of these operations from China investors, but more the state of China or big companies rather than individual investors. So for the moment, the European markets are not, don't have any product to sell to Chinese individual investors or Chinese fund managers, for example.
Sticking with the theme of China just for a moment, we can see from this image here, it's the Chinese Year of the Dragon. Now, there seems to be renewed optimism towards risk appetites with cyclical stocks making a comeback, the appeal of defensive stocks such as pharmaceuticals and telecoms declining. Could aggressive investors be seeking to profit from what has so far been a relatively defensive year?
Yes, it's true that the beginning of 2012, we've seen all the stocks which were down quite a lot last year. Cyclical stock, financial stocks went back up again this year in 2012, and all the defensive stock like utilities or telecom companies are probably a bit lower than they were in at the end of 2011. But I think our view in Valeco Finance is that we'll see a 2012 year with a lot of volatility, just like we had last year, with probably accidents in the course of the year involving Greece or Portugal or maybe France after the presidential elections. So the good start we had on cyclical companies are probably not sustainable. I think we will see some drawdowns during the year 2012. We had a good run already on those cyclical stocks, but for how long, that is the question.
The European economy shrank less than economists forecast in the fourth quarter, following better than predicted performances from Germany and France. Are we seeing a change in sentiment here, do you think?
For all the economists, it's very obvious that 2012 will be difficult. Even though France had finally a good last quarter 2011, and Germany also, the rest of Europe has been very weak. Italy has been in decline for the last 2 quarters, and we probably will have a 2012 year with no growth in Europe, even though the northern state of Europe, like Germany, Finland or Holland, will have probably better prospects than the southern part of Europe.
Valeco Finance invests mostly in Eurozone markets. This must be some positive news. What areas are looking strong at the moment for you?
I think banks are probably have another good momentum to see. We are trading on equities on banks level, which are really very, very low compared to their net asset value, sometimes 50%, sometimes a bit more. In all the part of the Eurozone, Germany, Italy, France, and I think in a low growth environment like the one we will have this year in 2012, banks with now better with the support of the ECB, the LTRO, are probably an investment that could see more upside than the rest of the equity market in 2012.
Guillaume, thank you very much.
Thank you.
That's all we've got time for here today. However, do check out the Dukascopy TV website for all of your interviews from the heart of the Swiss financial community. Goodbye for now.